Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of AMC Entertainment, ticker symbol AMC. And so I am recording this on Sunday, October 12th. Going to be going over the chart, some unusual whales data, options data, and yeah, just kind of wanted to give my perspective over here. But before I do dive into the charts, I did just want to point out that last week I did put out a video on my thoughts on the announcement of the vote for AMC to dilute. I'd encourage you to check that out. It's an hour long, but it really just takes you through my thought process. If you're feeling uneasy about it, not sure how you feel, it might be helpful for you just to get my perspective and again, my thought process, walking through my understanding, really starting kind of bearish, but then coming towards the end to be, feeling a little bit better, especially after the price action that we saw last week. So let's get into that. So AMC closed on Friday at a price of, it looks like $295. And that was after a week of being down by about 3.59%. So, maybe that doesn't really seem that great. But one thing, a couple things, looking at the chart, we can see the blue line that is going to be the 50-day SMA. And we did close above that. We've actually had 2 weeks closing above that, so I think that looks really good. And we also do have the volume incrementally increasing. So I do think that looks good as we are breaking above and closing above that 50 SMA. But one thing that's, maybe a little bit concerning is as the volume is increasing, kind of the spread of these candles are decreasing. So, there's a little bit of divergence there, but I don't necessarily think that's that big of a deal, especially because for last week, we did see a dip below that 50 SMA, but we, got bought up. We closed above it. So I do think that is good, especially with all of the panic on Friday, whether in the stock market or in crypto. Seems like there is a lot of sell-offs and, AMC in my view, performed very well. So I do feel good about that. But now let's switch over to the daily. And I'm just going to fast forward to the current time over here and throw up my drawings. Or actually, before I do that, maybe I just want to take a look over here. Excuse me. And so we can see that we did hit a low on September 4th, and that was at a price of $267. Then from there, we made our way up, got rejected from the 50 SMA, pulled back, got a more convincing move above, and we also got this close right here on October 2nd. That was at a price of $315. I think that was a really good close because it was not only above the prior closes, but it was above this prior high from September 19th, which was at a price of $3.08. However, from that, we did pull back below that 50 SMA, but closed the week above. Maybe we put in, a little bit of a spinning top there with a big wick to the upside and a big wick to the downside on Friday. But, I think one of the nice things about that, we did wick below the 50 SMA, but bounced and closed above. And not only that, but we closed higher than we opened. So I think that's a good look. We do see increasing volume over Wednesday, Thursday, and Friday. And so, again, I think that this is looking much better than I was expecting. And also, on Wednesday, on the 8th, we only hit a low of $2.79. I had wanted to see us hold above 280, but 279, not really that big of a difference. So, I think that is good. Also, I was expecting there to be a notable gap down, and we did not see that at all. And we have since, like I said, reclaimed that 50 SMA. So that is looking good. But then just throwing up the drawings here, I've talked about a lot of these levels in the past. And let's see here. So we got this trend line that we did kind of fake out break below, and we did again over here. So maybe what we want to do is adjust that trend line, but let's think about it here because, this is really just to illustrate higher lows being put in. This was still a higher low than over here, but, the low on September 26th with 280. We have not yet put in, we broke that trend of higher lows because on October 8th, we hit a low of 279. However, maybe we could look at this just by looking at the opens and closes, like the bodies of those candles. Do we have a trend here, of being higher? Generally, yeah. So I think that this is, kind of a fine way to look at it. Although, it would be nice if we had been holding above 280, but not that big of a deal. You can also notice that I do have this line here at 279. I've talked about that previously, and that was actually the low going back to July 1st, and that stood out to me as being an important level. I believe I put out a video here on August 6th when we hit a lower low at 278, so that didn't strike me as being very good. But then we did get a pretty nice rally after that, going up, about 17% to the upside. However, then fading lower and getting like this fake out breakdown below 279, below 278. And we actually hit a low on September 4th of 267. And I had previously, I believe in the last TA video on AMC, so that would be this one right here, higher highs, higher lows. We have now broken, the higher lows, but we do still have a general trend to the upside. In that video, I had talked about us potentially sweeping the lows, which could be just coming below 280, but it could also be coming down to, around 267. And I did talk about that into, my thoughts on the AMC dilution vote. So you'll have to check out that video as well. And both of those videos will be linked in the description of this one if you do want to follow up on my thoughts there. So yeah, I could see price, while I don't think this would be ideal, I could see price coming down to 267, and that really just be like a sweep of the lows, getting the weak hands out. So, while that would not be ideal, we want to be seeing price going up. I do think that there still could be, a bull thesis, if price does come down to 267 or right around there. If we go below 267, I'd want to see a wick below and bounce, kind of like, what I was talking about over here on the weekly, where for last week we wicked below the 50 SMA, but then bounced, closed above. So that's what I'd want to see, but like on the daily time frame, if we are to be going back to 267. So don't want to see us spending much time below there. Then I think that bull case kind of gets switched to a bear case. In all honesty, please do not take offense. And then over here, I'll also have this fib retracement going from that low of 267. And then let's see, I do have that drawn up here to the high, locked into place. So that's got to be right. And actually, we did hit a higher high on October 3rd. That was at 318, whereas, like I had mentioned, on October 2nd, the high, actually the close was 315, but the high was 317. We did just go 1 penny higher the following day. And so that's what I have this Fibonacci retracement drawn to. And, I had doodled out here, right here in white, that we could be pulling back to this downtrend, and that would be a retest of the 618 at around 286. And we actually swept that. We did go lower, but we didn't get all the way down to the 786, and that was at a price of, or that is at a price of 278. So just below 280. And that's actually going to be an interesting price for us to talk about because we actually did go below or right around 280. And I know that because I had a small order filled at $2.80. And so on the 8th, as I mentioned, the low is 279. We have the 786 here at 278. So I might just remove the drawings just to clean this up for a second. And then we can look over at the 15-minute time frame to see where this traded in the after hours. With kind of, a good amount of panic there on Friday into what is a long weekend. Monday is a bank holiday, I believe, which I think means bonds won't be traded on Monday, but the stock market will be open. So it's kind of, an odd weekend here. And with that, we did see a dip in AMC in the after hours to a low of $2.80. That's a level that I've talked about. I do view that it is important, and it was nice to add a little bit more down there. But at the same time, maybe we do roll over, maybe we gap down into Monday. So we will have to see about that. But yeah, switching back over to the daily, let's just see, what are some things that I would like to see. I'm not going to adjust the doodle. I was a little bit wrong there with us going a little bit lower, but any orders, at 286 would have been filled, and we are above that now. Hopefully we can continue up higher to get above this trend line, put in a higher high, maybe a higher close. That would be nice. Getting a close above 318 would be great. That would kind of, not necessarily be icing on the cake, but that would really kind of, put the fork in it, get us to be, hey, we're putting in higher highs and we're closing at them, so that when we do retest this uptrend, that would more likely be acting as support before we bounce and go higher. Again, in that last video that I went over, higher highs, higher lows. While we have to adjust that higher lows, we still could be and should be putting in higher highs above that yellow line that I have drawn there, which corresponds with a price of 326. And the reason why I have that drawn up here is because that was the high from August 11th. We want to be seeing some closes above there, but I suspect we might be getting rejected before we bounce and retest of that trend line before going higher. And so what are those trend lines in case you missed them in the prior videos? We do have this trend line over here, which is actually a ray. I do have it pinpointed to the high from May 27th at a price of 408, and then also the high from July 21st, which was at a price of 360. So those two pivot points, and we are currently above that trend line. And, but we did get a fake out break above it before retesting, getting back below. Hopefully now we are seeing, the moves above, and we're not going to be retesting it again. And then another way to look at that trend line is to flip over to the log scale just to see. And we also have this other green trend line that does seem to correspond with, where I have that effectively like bull flag retest pattern there. So I do find that to be pretty interesting, but we'll take a step back, bigger time frame to flip over to that log scale and see that in a minute. But then also we do have this white trend line here, which is again a ray. I do have it pivot points to April 4th, the lows there, which were at 245, and then also the pivot lows from April 30th at 253. And we can see that we nearly got a test of it over here in July, and then nearly, broke below, fake out break below in August, right before earnings, when we were testing, that 279 level, got that 17% move to the upside. And then we started to consolidate below it, broke below, rejected here from both of those trend lines. And now we want to see us getting back above it. But yeah, with this perspective, let's also throw up the log scale there just to see. And actually, I think that, either way, this shorter time frame, I think either way it's fine, both of those levels. But yeah, just keeping it on the log scale to get kind of the macro perspective. Now we can see that green trend line, it goes back to the high from November 6th of 2023, which is at a price of $11.43. And we had actually tested that over here on May 14th of 2024. I've talked about it before. That would have been, a great opportunity to sell. And it's very cool that it did correspond with the level over here. So I think it's a nice example of like technical analysis can really work. But, for me, I didn't sell there. Unfortunately, it would have been nice. I could have bought back more down here, but it is what it is. But anyways, talking about that green trend line, the other touch point there is the high from December 5th of 2024, which was right before we got the announcement of dilution, and that high was at a price of 556. And so over here, we can see that we did test it on May earlier this year, May 27th, hit a high of 408. and nearly got up to that level in July around the 21st, and then again more recently at the beginning of October. So I think it will be really good on many levels for us to see our price action getting above and closing above 315, 316, 318, whatnot, because that would then be getting closes above that green trend line that we just went over, and then getting closes above 326. I think that would really be starting to cement the fact that this is shifting into starting to move to the upside. So I would think that'd be looking really good. Also, I did talk about this before, but volume increasing here as it was decreasing here. Maybe that inflection point is suggesting that the bottom is in. And RSI, we were putting in lower highs, now starting to put in higher highs. We want to see that maintained in the stock price as well. And also do have this yellow trend line here, but I'm not going to dive into that necessarily, but it does seem to have corresponded with some nice turnarounds, whether we wicked below or tested that as a level of support. So very good to be keeping that in mind. But real quick, let's just look over at some of the options data from Unusual Whales. So we can see here net call and put premium from Friday, October 10th. This, in all honesty, doesn't really look that exceptional. But what does look exceptional, as I had talked about, was the stock price in yellow, actually ended up green on the day. So I think that's great, especially when there's kind of panic in the market. We do see net put premium in red more or less being flat. So that's generally good, but it's not tons of money or anything like, well, I guess it's flat. So of course not, but it's around or just shy of $14,000. Now that is buying of puts or suggests buying of puts, so maybe that's a little bearish. But again, like I said, it's flat. We do have net call premium going up, as you can see here in green, kind of following the stock price in yellow there. So that does look good, but it's only up around $130,000. What we really want to see is like millions of dollars going long on AMC, or selling puts, which would be going long, suggesting that bottom's in. Millions of dollars going long on calls, suggesting price action to the upside is impending, and then we move to the upside. But if we do look over the past 30 days, we don't really see anything too incredible with net call or put premium. The highest or the absolute value, the largest spread that we saw from zero over here was $1.06 million, and that was on September 19th. And so we want to kind of see a trend of that. That would be suggesting that we're going to be seeing some volatility, whether it's to the upside or downside. That would be reflected in the net call and put premium over here. So I'll definitely keep you posted on that. But I did also want to note that flipping back over to the daily here, we can see that the bear bull slider, the majority was on the bullish side, but it's only about 50%. So again, nothing too crazy going on over there. And just to point out, since I did just learn about these tabs here, insider trading, and we can see that Frank Elizabeth, who is the EVP Worldwide Programming, not really sure, he did have a sales. There's a little bit of selling. It's only about $300,000, and that did occur. Actually, sorry, that was on February 28th, so no insider transactions to report recently. But then if we do look over at the Greeks, which is going to be like the Max Payne, stuff like that, still right around 3, as price is right around 3, having closed, on Friday at 295. Well, it's below Max Payne. It's not much lower than Max Payne. And I think that, as I've gone over in the chart, I think that we could be starting to make our way up higher. And between now and the vote on, dilution, I think that what we need to see over the next 2 to 3 months, really 2 months, is AMC's price action really start to go to the upside. And regarding that vote, I think that, what we should be doing, unfortunately, you may not like it, is I think that we should be voting yes on that, because if we don't, that means that basically an APE 2.0 could be happening again. And looking at the chart, we don't want to see that. And so I think that giving AMC access to the capital via shares is the right path to go. Hopefully they don't have to dilute because price is going up, and so that just means that they have the capability of accessing that capital if needed for whatever reason. And if stock price is higher, diluting at a higher stock price is good. So let's see the next couple months that momentum turn over. And if it is to turn over, I have talked about a couple puts here that one could be selling to be picking up shares at a discount. I had considered this one, the $3 put with an October 17th expiration. So that's this coming Friday. And I believe I had wanted to get one of these at 37 cents. If we do scroll down to see the premium here, the highs, it looks like the highest was around, let's see, 31 cents or 34 down here on September 19th. And so I didn't get a fill. I was not about to get a fill, and that would be selling so that I would then be, let's just pull up the calculator here. You know, if $3 is the strike, which it is for this contract, and I were to sell one of these for a 34-cent premium, I can just subtract 34 cents from $3, and that would put my average buy at 66 cents. So that would be good. But I was hoping to, get a lower fill. And since that didn't get filled, I was considering more recently looking at the next month out. So the $3 put that expires in November, so about 40 days from now, I was considering selling one of these, but then I kind of, maybe I don't want to do that, just kind of thinking about it. But maybe if AMC's stock price is looking pretty strong as the market kind of panics, or relative to the market panicking, maybe this is something to consider. And if we do look at the highs for the premium here, we do see the high on October 7th was actually 41 cents. So let's see over here. If we would do $3, that would be the cost per share based on that strike. But then factoring in that premium, that would be 41 cents. So that would effectively be buying 100 shares at a price of $2.59 if AMC closes below $3 on November 21st. So that could be, a very nice way to pick up some more shares again at a discount. But if we do look at the high from Friday, or let's even look at the low from Friday, just to give some, which is also the average, to give some perspective on what maybe a more realistic fill would be. So if we do type in $3 here, put in that low of 33 cents, that would be, a fill for shares of around 267, which is, very interesting. The low that we saw over here on September 4th, the low was 267. So this would actually be, a pretty nice fill for shares, if you ask me, based on that low for this. It's just the only way to actually pick up those shares is if the stock price does close below $3, like I said, on November 21st. If it doesn't, then you just pick up 33 cents in premium, which, if you're not familiar with options contracts, each contract represents 100 shares. So 33 cents times 100 shares is the amount of premium that you'd be picking up if AMC is closing above $3 on November 21st. That would mean that you don't pick up shares, but you did collect $33 in premium per contract sold. But in order to sell one of those cash secured puts, the reason why it's called a cash secured put is because you got to have the cash to secure it. So let's just do the math on that. If it's a $3 put, you need to have, $300 to secure that put, because 3 times 100 shares is 300. But to consider the premium of, let's say, 33 cents here, that would mean that you would need to have $2.67 per share secured per contract, each contract representing 100 shares. You would need to have $267 in your account to secure one of those puts. And that could lead to, like I said, a profit of $33 per contract if AMC closes above 3, or per contract you would get assigned, and you would be effectively getting 100 shares per contract at an average price of $2.67. So I think that's pretty cool. I'm considering that, actually listening to myself talk about this, but I don't have any orders placed, whether it's shares or contracts right now, but I am interested in that. And actually, there's one other contract that I might actually just pull it up here. So if you are still with me, let me know in the comments if you are still watching at the end. But there is another contract that, I've got to sort these by alphabetical. So we do have the other ones up here. There is one that, I do have a position in. And I just have one of these contracts. This is the $5 call that expires January 15th of 2027. So 460 days between now and expiration. And I had gotten one of these at a price of, let's see, $1. So that's $1 times 100 shares is $100 is what I'm risking on this. And I was actually thinking I did have an order placed, a limit fill for this at 50 cents on Friday. It did not get filled. As you can see, the low there was 57 cents. But, maybe this is one that is of interest to be, picking up because, $5 strike, that's really not too unreasonable with price only at $3. I did previously pick up some of these $20 calls that expire in January of 2026. That's 96 days between now and expiration. It's a $20 strike. I regret doing this. I think that these are probably going to be going to zero, but maybe over the next couple months we see some moves to the upside, and these do, start to move higher in price. I should note that the low on Friday was 4 cents. I think my average is 14 cents, and I think I've got 50 of the contracts. So those might be going to zero. And just to, share what I am risking with that is if it's, 14 cents, that's going to be 14 cents times 100 shares per contract is $14 per contract, and then multiplying that by 50 contracts. I'm risking about $700 there that could be going to zero. It would suck if that happened, not the end of the world, but, I could potentially see this going back up. I'm at best slightly less or slightly more than 50% down on that, with the high on Friday being 6 cents. But yeah, that's just my perspective on the options contracts, if that is useful for you guys. But yeah, generally in the chart, I want to be seeing us getting closes above 318 here, and then a retest of around 310 before we start to see some closes above 326. And then I'd feel a lot more confident about the bottom being in over here on September 4th at a price of 267. But of course, that is not the all-time low. I believe we see that over here on April 4th, which was 245. And actually, no, that's not the all-time low. That was hit in April on the 16th of 2024, and that was a low of 238. So bigger picture, we are still putting in higher lows. So I think it's, kind of a good time to be keeping the chin up, but also having a realistic perspective, realistic outlook that if we don't start to see some momentum to the upside between now and December 10th, when we do vote on that dilution, then I think that, things would not be looking so good. So I think the next 2 months are really important for AMC. And so let's hope that they are good ones. And, with that being said, I will be streaming tonight for Ticker Request Live at 9:30 p.m. Eastern. Probably just going to be an hour long because I have work in the morning. But, if you have follow-ups on this or any other stocks, make sure you join. But, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot, and take care, you guys. Have a great rest of your Sunday. We'll see you later.